Hello, and thank you for joining us for another episode of This Week in AML. I'm John Byrne, Chair of the AMLRS Advisory Board.
And I'm Elliot Berman, our Thought Leadership Content Manager. We are excited to welcome you to the This Week in AML podcast,
where we explore key news and developments in the global financial crime prevention community.
Hi, John. How are you today?
Hey, Elliot. Happy New Year. How have you been?
Happy New Year to you. I've been well. I've been traveling. We were in Denver for a wedding New Year's Eve and then came out to LA. This will post, but after we're recording. But that didn't keep me from paying attention to what's going on in the financial world. And you and I both came upon this joint statement on crypto asset risks to banking organizations issued this week by the Federal Reserve, the FDIC, and the OCC. What's your take on this?
Well, I think it's consistent with what many of us have been saying in terms of the end of the year review of 2022 and what to expect in 2023, that there'll be more active events, projects, direction on crypto asset related regulation. So whatever ends up happening, it's pretty clear, whether it's the FTX or some of the other issues that occurred in 2022, that the regulators know they can't sit still. And this one I thought was, it's always, these joint statements are always valuable, but this is really the first out of the box for the new year, I think is relevant. And as we know, it was issued by the Fed, the FDIC, and the OCC. And they make a pretty strong statement up front, again, obvious, but a strong statement. The events of the past year have been marked by significant volatility and exposure of vulnerabilities in what they term the crypto asset sector. And then they list a number of risks that I know we'll talk about. But I do think, what's going to happen here is there's going to be a focus in the U.S. by the Congress and the regulators what needs to be done. And I will just tell you sort of a off-the-record conversation I had with some folks on the House side. As we know, the House is now, although as we record this, it hasn't happened yet because of a lot of chaos, but the House will be run by the Republicans on this issue, on crypto and stablecoin, the things that sort of fall under that broad category. I don't see this as being partisan. So I think, like the Senate, the House will, in the House Financial Services Committee, maybe some of the other committees as well, will continue to look at these issues and these risk mitigation ideas and recommendations that they have. So long-winded way of saying, this to me is sort of putting a stake in the ground saying, okay, folks, a lot going on out there. From the banking perspective, here's what you need to think about, and we will do more and more guidance and statements on this going forward.
Yeah, there were two explicit statements in the joint statement that I thought were interesting because if you saw one or the other by itself, you'd almost say they were going in different directions. One is, it is important that risks that cannot be mitigated or controlled do not migrate to the banking sector. Okay, I mean, that sort of makes sense. If you think about risk management, it's about identifying risks, it's about mitigating risks, and then deciding what your risk appetite is for what you'll take as less mitigated risk. So that made sense. And then the other one is, it's neither prohibited nor discouraged banking from providing services to customers of any specific class or type as permitted by law or regulation. So again, we're not telling you don't bank crypto related companies. That's the unspoken piece there. But it's interesting because they frame it very carefully, because as we know, there's the whole issue around cannabis banking because of whether it's permitted by law or regulations. So kind of interesting framing out the whole thing. They list 8 classes of risks that they're concerned about. Some of which you can clearly tie to specific events. They mentioned stablecoin, and of course the Terra USD Luna problem of mid 2022 comes right out of there. They talk about the legal uncertainties by exchanges being effective, with custody and redemptions and ownership rights, and that FTX and BlockFi both, popped up there where there and others where there were restrictions on withdrawals, and particularly with FTX, there's a huge question that is going to be resolved probably by the bankruptcy court about, ownership of assets and things like that.
Yeah, and a couple of the other risks are relevant because they're relevant to the existing financial sector. So when they say that one of the risks would be risk management and governance practices in that sector that exhibit a lack of maturity and robustness, well, that's an issue for a small bank startup, right? That's an issue for a big bank that's engaged in different products that they weren't used to. So I think that what the regulators are telling everybody is what they've been telling, I'll say or at least our former industry, is that governance needs to be strong in risk management, and certainly there's more of a chance in the crypto world that is not mature yet, but certainly we've seen examples of risk management deficiencies and internal structures in existing financial institutions, traditional financial institutions, that have been problematic. So I think by saying that, they're not entering new ground at all, but they sort of have to continue to mention those things. So I think that was another important part of this. And to your earlier point about them coming out with their statements, they almost have to say that. They almost have to say, look, we're not going to tell you not to bank, because there's been so many examples. The marijuana business is certainly one that you mentioned. The whole de-risking issue, all these things have been problematic. ATM operators, for which I'm not as sympathetic, but of course, that's also another issue. So I think the regulators almost have to say, look, we're not telling you not to do this. They don't have the legal authority to prohibit it anyway, but they're also saying, look, we're giving you a heads up that you need to pay attention. And I could see potential enforcement actions down the line where this document is going to be used as the list of potential offenses, right? Hey, we issued this in January, and here's what you didn't do, traditional financial institution, regarding your customer or your customer's customer that's in the crypto asset world. So I think it's a really good premise to start from, and I also think they do a good job of not prohibiting, but definitely sort of wagging their proverbial finger and say, be careful here,
Right. And as you pointed out, all of this is really, a refocusing traditional advice and parameters on a more emergent industry. I think that we've seen this in other spaces when other things were emergent, or where we saw the industry, the traditional players in the industry that focused on I'll call it more exotic product, being followed by a lot of organizations that probably didn't have the knowledge and sophistication about that product. Trade finance is one that I think of,
Right. Yeah.
We've had instances where companies thought, oh, trade finance, that looks like fun. I mean, I'm not trying to make fun of them, but they certainly didn't sit down and say, okay, who's our trade finance expert? Where are we getting the knowledge? How do we evaluate our systems? It was more, I think they never used the word, but I feel like this is a reminder, don't just chase revenue and profit. You really have to manage,
Right. Yeah. I say finally from my end, reference a brief mention, but a mention of cyber attacks. That's also going to continue to be a big challenge for all of us in our broad-based AML sanctioned CTF community in 2023. And the regulators also make it clear that there are vulnerabilities related to cyber attacks in the crypto world. So you need to factor those risks in as well.
Yes. One other sort of, what isn't here. So this could have been arguably a joint statement from the FDIC, which would have then brought in the NCUA. I'm sorry for all the letters, but, FFIC is all the regulators together, and the NCUA is the federal credit union regulator. But the federal credit union regulator is not deaf to this stuff. They issued some comprehensive guidance about dealing with. They focused on it from a distributed ledger technology perspective, but comes to the same point back in May of 2022. So for those of you in our audience who, work with or work at credit unions, there is guidance for you as well. I also would recommend that, this guidance is a useful outline of things to consider and be sure that you're dealing with as you work with crypto customers, and also customers who want you to help them with crypto, which are, in a sense, two different classes of risk that you would have.
Yep. So the document is on the agency's websites, of course, January 3rd, and there are some links to previous statements and other directives there as well. I would just say, as we've just both alluded to, this will be the beginning of a probably year-long and maybe years-long focus on what needs to be done to mitigate, reduce, and understand the various risks regarding crypto assets.
Yes, I'm sure that you and I, both privately and through our podcast and our writing, will touch this topic a number of times more during 2023. So what's in the pipeline for the rest of this month, John?
Well, on the 25th, we are going to be doing a webinar on the continued challenge of human trafficking. This is Human Trafficking Awareness Month, so we'll be fortunate to have a few experts from some anti-trafficking organizations like Polaris. We are looking for the possibility of an additional person from the AML community writ large. But bottom line is we're going to give you updates on what's going on with the human trafficking issue from a financial crime perspective. So that'll be there. There's a few other things that actually I have in the pipeline that I've not scheduled yet. I got a really interesting, and we haven't had a chance to talk about this, but I had a really interesting offer from folks from the NGO community. If you remember, at the end of December, both the UN and actually the Treasury separately issued some statements regarding helping the ability to have humanitarian work proceed without too many restrictions. I'm being very generalized here, but the folks from the NGO community said they'd love to explain the licensing process, because their goal is always to get money, funds, and help in the hands of victims of conflicts and victims of crises around the world. So just got that offer yesterday, so I'm going to try to get that up as a podcast in the next couple of weeks, but obviously something that our community cares deeply about.
That'll be very interesting. And again, for those who don't live in the sanction side, the licensing piece is how to get permissive exception to prohibitions under a sanctions rule. So have a great rest of the week and great weekend. I'll be back home shortly, and we'll find something interesting to talk about next week.
Great. Elliot, stay safe, and
you too.
Safe travels.
Thanks.
Take care.
Bye-bye.